JJ the CPA here. We're going to talk about, for business owners, why you should never make a charitable contribution again. Under the new tax law, as we know, the standard deduction has been increased for $24,000 for married filing jointly. And that is then something you'd want to take advantage of if it exceeded your itemized deductions. Well, your itemized deductions include charitable contributions. It also includes real estate and state taxes, but under the new tax law, that's limited to $10,000. Mortgage interest is part of itemized deductions, so stay with me. Itemized deductions now are kind of three main components. Real estate and state taxes, limited to 10 grand. Mortgage interest, limited to mortgages that are 750 grand or less, and charitable contributions. Take those three things and compare it to the standard deduction of $24,000 and you get the higher of. Now, there's going to be a lot of you that when you add those three numbers together, especially if you're in a state that there is no state taxes, or you're in a situation where your house is paid off or down, or you're somebody that when you combine all those numbers together, it's just less than 24 grand. And therefore, if you made any charitable contributions, they're not going to give you any extra benefit. It's not saying that charitable contributions aren't deductible. It's just that if your itemized deductions are here and your standard deduction is here, you're going to take the standard deduction. So listen in, business owners, right here. This is going to be one of the best tips I've ever given. If you, through a business, give to a charity, you can take that deduction as a sponsorship. There's some complicated rules around this, so if you're watching this and you're getting ready to go, no, I've never heard of such a thing, well, you can just turn this video off right now because I don't need people like you watching it, okay? Here's the deal. The IRS allows a charity to receive sponsorships and it's still tax-free to that charity, okay? Now, if they receive advertising dollars, that is not tax-free to the charity in most circumstances. But if they receive a sponsorship, that's deductible. And the tax law does not require a huge banner that says, we want to thank XYZ company for sponsoring XYZ event. If you sponsor anything, you actually even don't need recognition under the law to be considered giving a sponsorship. And then here's the thing, as a business owner, when you give a sponsorship, it is fully deductible. Okay, there might be some little caveats around that. We're not going to get into that because you need to talk to your CPA for any of those little minor caveats. But if you're in a situation that you're getting ready to give 1,000 or 5 or 10 grand to a charity, okay, something that helps infants, something that's helping the homeless, you should be able to find a way in that organization, because they're going to be motivated to get your dollars, that you are sponsoring something. You're sponsoring an event, you're sponsoring a weekend, you're sponsoring something that then allows you to get that full deduction. So it's not a charitable contribution, but you're still giving to a charity. And now it's a business deduction. And guess what? The business deduction's fully deductible. Then check this out. You're still taking advantage of that $24,000 standard deduction, and you got all of your charitable, now sponsorship deductions to come into play, which gives you the best tax picture. And to go one step deeper, when you have a sponsorship deduction, a business deduction, that's even better than having the standard deduction or itemized deduction, because it reduces down the net income of your business, which reduces down your adjusted gross income. Wow, we covered a lot of stuff. Probably your head could be spinning if you're not in the industry. So here's what you need to know. Get with a CPA, and if the CPA stops you in the middle of this explanation and says, no, you can't do, fire them, go hire somebody else, because the kind of CPA you want to hire is somebody that's going to look at the law and fully understand it and not just tell you no because that's what they think, okay? This is complicated stuff, but we have clients that we properly take advantage of this, and we're saving many extra thousands of dollars because we're thinking outside the box, we're making sure everything ticks and ties and everything's done properly. But when you do that and you don't have a closed mind, that's when you're going to save taxes. All right, hey, thanks for tuning in. And please subscribe. If you like my video, right down below, hit subscribe. I would so appreciate it. And then don't you ever forget, you've never met a CPA quite like me.
Get the